Fundamental analysis. Economic analysis. Purpose. Assess the overall economic environment to determine the impact on stock markets and individual investments. Key economic indicators. Gross domestic product, or GDP, measures the total value of goods and services produced in a country. A growing GDP indicates a healthy economy, while a declining GDP signals economic trouble. The inflation rate is the rate at which the general level of prices for goods and services is rising. Moderate inflation is normal, but high inflation can erode purchasing power and impact investment returns. The unemployment rate is the percentage of the labor force that is unemployed and actively seeking work. High unemployment indicates economic distress, while low unemployment suggests economic strength. Interest rates, set by central banks, influence borrowing costs and spending. Lower interest rates tend to stimulate economic activity, while higher rates can slow it down. The Consumer Confidence Index, or CCI, measures the degree of optimism that consumers feel about the overall state of the economy and their personal financial situation. Example: during an economic downturn, such as the 2008 financial crisis, stock markets worldwide experienced significant declines due to decreased consumer spending, high unemployment rates, and low consumer confidence. Industry analysis. Purpose. Evaluate the conditions and trends within a specific industry to determine how they might impact companies operating in that sector. Key factors. Industries typically go through stages of growth, maturity, and decline. Identifying the stage helps predict future performance. The growth phase is characterized by high demand and expanding market share. For example, the technology sector in the early 2000s. The maturity phase sees slower growth and increased competition. A good example is the automobile industry in recent years. In the decline phase, there is decreased demand and market shrinkage. The coal industry in recent decades is a prime example. Next, we have the competitive landscape. This involves assessing the number and strength of competitors, market share distribution, and barriers to entry. The regulatory environment is also crucial. It's important to understand the impact of government policies, regulations, and legal requirements on the industry. Technological advancements play a significant role too. Identifying how innovation and technological changes can affect industry dynamics and company performance is vital. Lastly, we have supply and demand dynamics. Analyzing factors influencing the supply chain and consumer demand is essential. Example: the electric vehicle, or EV industry, is currently in the growth phase, with increasing demand for sustainable transportation and technological advancements driving competition among companies like Tesla, NIO, and traditional automakers transitioning to EVs. Company analysis. Purpose. Evaluate a company's financial health, performance, and potential for future growth. A key component's financial statements. Income statement shows the company's revenue, expenses, and profits over a period. Key metrics include net income, revenue growth, and operating margin. Balance sheet provides a snapshot of the company's assets, liabilities, and shareholders' equity. Key metrics include the debt-to-equity ratio and current ratio. Cash flow statement details the company's cash inflows and outflows. Key metrics include operating cash flow and free cash flow. Management effectiveness. Assess the quality of the company's leadership and their strategic vision. Look for consistent performance and sound decision-making. Competitive positioning. Determine the company's market share, brand strength, and competitive advantages. Growth prospects. Evaluate potential for future growth through expansion, innovation, and market opportunities. Valuation metrics. Analyze valuation ratios such as price to earnings, PE, price to book, PB, and price to sales, PS. Example: analyzing Apple's AAPL financial statements reveals strong revenue growth driven by product innovation and a robust ecosystem, a healthy balance sheet with low debt levels, and significant cash flow, indicating solid financial health and growth potential.